Hello and welcome to another update video about FETCH.AI. FET broke below the 10th of October low. With that break, the direct move to the upside is invalidated. We already saw a break below micro support yesterday, or on Wednesday it was, and I highlighted, look, it's the last chance for the bulls to turn up. Clearly they didn't. That still doesn't mean we're now in a bearish scenario. I'm considering this still a bullish count. We're just forming a slightly larger B wave. And the support levels here are still the same that I already communicated with you before, because they are based on the measurement of waves A and B to project out the ideal target range for a C wave, but also based on the overall WXY structure on the chart. We get some Fibonacci levels that we can watch, where the price can now form some, or find ideally some support after the price now that the price has broken below the swing low from the 11th or 10th of October. Now, what are the next levels to watch to the downside? So we have some Fibonacci confluence around the $1.17, $1.18 level. We have $1.07, $1.01, where we also find some structural support possibly, yeah, and the 92-cent level. Now, I'm not telling you we come down to 92 cents necessarily, but it is one of the key support levels, yeah. And ultimately, I'm tracking here an ABC structure to the downside within a wave Y of a B wave correction. So it's currently seen as a corrective pullback in which the decline seems to be an ending diagonal. So the idea would be we completed wave 1 in 3 waves, wave 2 in 3 waves, wave 3 might still be unfolding, possibly goes directly a little bit lower before then the wave 4 starts and a wave 5. Now, if this is really the case, then the price shouldn't really break above the 61.8 retracement of the length of the third wave. So to understand when the microstructure is moving or morphing, we can just simply put a resistance area on the chart. And that resistance area, we highlight this in red, needs to actually include the 61.8 retracement, because a wave 4, even in a diagonal, shouldn't really break above the 61.8 retracement of the third wave. And again, that's at around $1.38. So we have micro support resistance at 132, 135, and 138. And as long as we are below the resistance area, the focus would be on lower for at least one more low. I mean, one more lower low. No, one more lower high and one more lower low. Before then, a low is ideally struck in the B wave, and from where the price can then, you know, start a C wave rally to the upside, but it would include obviously a 5-wave structure, and we have to be watching for, well, some evidence first, like a 1-2 setup to the upside. Ideally, the first 5-wave move above initial resistance, and then a 3-wave corrective pullback. That's the update about FET. Hope you liked the update. If you did, please hit the like button, leave a comment, and subscribe. And if you really like the content, then please check out the channel membership. Also, make sure that you follow us on Instagram and Twitter for additional content. Thanks a lot for watching. Bye-bye.